Hello guys, welcome back to a new video. Those who haven't watched how to pass journal entry video and the simple journal entries video, I request you to watch them first so that it will be easy for you to understand this video. The link you can find it in description, or else you can also click this above I button. Ram became insolvent. He owed us 10,000 rupees. Compensation of 75 paise in a rupee was received from his estate. Ram became insolvent. Here, insolvent means the person who is incapable of paying off his debts. The one who is unable to pay his liabilities is called as insolvent. He owed us 10,000, so which means he is a debtor who has to give us 10,000, and but that particular debtor became insolvent. The court has announced him that he is insolvent. Compensation of 75 paise in the rupee was received from his estate. The meaning of this sentence is that every 1 rupee of his liability, 75 paise was settled from his estate. So which means we have given 10,000 rupees, but we have received for every 1 rupee of this liability, 75 paise only we received from him, which is nothing but 7,500 rupees. That is 0.755 rupees for every 1 rupee of liability, but we have given 10,000 rupees. So he owed us 10,000. For 1 rupee 75 paise, then for 10,000 how much we received? 7,500 we received from him. Then the amount that was not received, that is this difference 2,500, we have to mark that as bad debt, which means that the debt irrecoverable from a debtor is a bad debt. So once a debtor becomes insolvent, then the amount that is irrecoverable from the particular debtor has to be marked as bad debts, and we have to close his account. Let's do the rough work for this journal entry. This is actually a compound entry. Here it includes two transactions. One transaction is that we received 7,500 from him, and the another transaction is that the money that we couldn't receive from him, we have to mark that as bad debts and we have to close his account. These two transactions we are going to combine. That is because both the transaction reduces Ram account. Ram has to give us 10,000, so he would have been marked as a debtor in our book. 7,500 we received from his estate, which will reduce his account. Remaining 2,500 we mark that as a bad debt that we are not going to receive, so we are going to close his account. So that also reduces his account. So both will reduce Ram account. So let's do the rough work for this one. The accounts affected in this journal entry are, the first thing is that we received cash from the particular debtor, so cash account is affected. And then the amount that we could not receive from him, we have to mark that as a bad debts. So bad debts account, which is a loss for us, that has to be recorded. All the losses, whenever it occurs, it has to be recorded. Then we have to close Ram account. Ram is a debtor. Cash, you know very well that it belongs to the category asset, and general balance of any asset is debit. Bad debt is a loss category. Expense and loss. Okay, it's a loss. Expense and losses belongs to general balance is debit. Ram is a debtor. Debtor is an asset. I had just explained why a debtor is an asset in previous video. Those who haven't watched that video, I request you to watch that video first. Debtor is an asset. So all are debit balance account. Now what happens to each account? We receive cash from Ram, 7,500. So our cash will increase by 7,500. So this will increase. And we incur a new loss. I told you in the previous video that whenever we incur any expense loss, and we have to keep recording them. So at the end, total expenses and losses we have to deduct from the total revenues and gains in order to calculate the profit or loss. So this loss will be added to the already recorded losses, so that total loss will increase. So expenses and losses, whenever you record, they always increase. Ram, a debtor, we close his account for the money that we received from him, the money that we could not receive from him, both reduces his account. So Ram account, we close it. Now apply the rule of increase and decrease. These two account increases, so apply the rule of increase, which says same balance. These two are debit balance accounts, so we also have to debit their account. And this one apply rule of decrease, which says opposite effect. This is a debit balance account, opposite effect is credit. Write the value in bracket. That is we receive cash 7,500 and there is a loss of 2,500, and total account of Ram closed is 10,000. The money given by Ram also reduces his account. Since remaining money we could not recover from him anymore, we have to close that account and we have to mark that as our loss. So his account reduces 10,000, whereby we receive only 7,500, remaining 2,500 is the loss. This is the rough work. You see, there are two debits and one credit. I told you there will be two effects, but both the effect will affect minimum two account. It can be more than two account, like this case. Since it is a compound entry, I told you that also. When there are more than two accounts, then it must be a compound entry, that is a combined entry. Here it is a two transaction. We receive cash from Ram and we close remaining value as bad debts. You see, there are two debits and one credit, but value of total debits are equal to one credit. 7,500 plus 2,500 is equal to 10,000. Total debit must always be equal to total credit. Okay, let's write the debit accounts first. That is cash account debit, bad debts account debit to Ram account. 7,500, 2,500, 10,000. Narration you can write here, compensation of 75 paise in a rupee out of rupees 10,000 received from Ram, who became insolvent. So you can simplify like this, and you can write the narration for bad debts. This is the journal entry for this transaction.